Papua New Guineans are major shareholders of BSP through number 1 Super, owning 12% of its shares. The superfunds says they will be bearing the brunt of this harsh move, losing around 23 million Kina in what could be dividends paid to them, but instead taxed from BSP's net profits, and that the tax levy is actually the government taxing net profits of companies which shareholders would have otherwise received. In an interview with NBC National News today, BSP Group CEO Fleming describes this levy as a tax on its shareholders and an arbitrary one.
We'll be releasing our first quarter results to the market on around about the 25th of April, and at that market announcement, which will have details of our revenue, expenses, net profit and the like, it's expected that the 190 million will be taken up in full against our year-to-date profits for March. The disappointing coincidence that as it arrives pretty much on the 20th anniversary of the privatisation amalgamation of Papua New Guinea Banking Corporation with BSP on the 9th of April 2002, and whilst we've been able to achieve record profits, we've also recognised our responsibility to bring banking services to everyone around PNG.
Mr. Fleming says despite this move, the bank is not planning to increase and impose fees on its customers, but rather further lobby the government for a win-win situation for all.
To recognise that there's certain segments of our customer base which do need to continue to provide fee relief to. On the 1st of April, we announced changes to our SME products to reduce the fees on the monthly service account for those SME products, to reduce or eliminate some of the in-branch transactions, especially for deposits. And we've undertaken some other changes in March, which is to reduce the amount of the fee for cash handling. We increased the threshold. Previously the threshold was 5,000 Kina any cash deposits. We've increased that up to 10,000 Kina.
Stella Martin, NBC National News, Port Moresby.